Those of you that know me or watch this channel for maybe a long time, you'll know that I'm a bit of an international guy. I grew up in the UK, I've moved a bit around Europe, and I now live in Spain. And I try to give my content from the perspective of Europe as a whole. So not just focused on one country, but so that it's applicable across countries in Europe. I've done personal finance content from the perspective of someone living in Spain. I've done personal finance content from the perspective of having lived in the UK and knowing a bit about that, but I haven't made anything from the perspective of living in France, which is where I also used to live before I moved to Spain. That's all going to change in this video because I'm going to talk about how to invest your money whilst living in France and obtain tax advantages as a result. So if you're living in France and you're looking for the ways to optimize your investing strategy, then this video is for you. So without further ado, let's get right into the video. Welcome to Millennials with Money. My name is Johnny and thank you for joining me for this video. Now, what we're going to talk about in today's video is a tax advantage investment vehicle in France called the PEA, or the PEA as it would be pronounced in French. PEA in French stands for Plan d'Épargne en Action, and over your lifetime you can invest up to a certain amount of money in specific assets that fall within the criteria allowed for that type of investing account. And the main criteria for those assets, whether it's stocks, ETFs or bonds, is that the asset has to be domiciled within the European Union. So that means that through a PEA account, you could not invest in US stocks. You can, however, invest in ETFs that replicate the likes of the S&P 500, emerging markets, and the rest of the world. Because of the way banks set them up, they typically use synthetic ETFs, and what that means is they essentially buy the right to the performance of a particular index or set of assets. To be eligible to open a PEA account, you must be over the age of 18 and have your fiscal residence in France. That means you can be a non-French nationality, but as long as you live in France and that is your tax residence, then you can open this kind of account. That does mean though, if you're a French national living abroad and France is not your tax residency, then you could not open a PEA account. You would have to be fiscally resident in France to be able to open it. You're only allowed to have one PEA account open in your name. So that means that if you live with a partner or a spouse, then they could also have a PEA account. However, if you had non-adult children, so under the age of 18, then you could not open a PEA account for them if you already had one open in your name. However, if you have adult children that are living with you, but they're over the age of 18, then they can open their own PEA account. Now for the good stuff, let's get into a bit of how the PEA works. So as I said, there is a limit of how much money you can pay into your PEA account over your lifetime, and that limit is 150,000 euros. Once you hit 150,000 euros, you can no longer pay into your PEA account. However, if you make capital gains within the PEA, or if you receive dividends, then you can continue to reinvest them within the account. There's no problem there. Now, the tax benefits that come with this account are essentially that any capital gains that you make within the PEA are exempt from income tax in France, and any dividends that you receive from French companies that you've invested in or French assets that are within the PEA are also exempt from income tax. If you invest in a company that's based in another EU country, then any capital gains tax again will be exempt. However, because of double tax agreements and taxation based on that country's law, then dividend tax will be withheld on any dividends paid from, say for instance, a Belgian, a Dutch, a German company that you're holding within the PEA. There is one big catch, however, and that's that if you want to fully enjoy the benefit of these tax advantages, then you cannot withdraw money from your PEA account for at least 5 years. If you do withdraw part or all of the money before that time, your entire account will be closed and you will be taxed an effective rate of 30% on any capital gains that you have made from its opening to its closure. Other situations in which your PEA account can end up closed is if you exceed the 150,000 euro paying in limit, if the holder of the account passes away, or if you withdraw all of the money after 5 years. After 5 years, if you haven't touched the money in the account, then you will benefit from those tax advantages and you can withdraw part of your money without any penalty from the account. Do be aware, however, though, that although your capital gains will be exempt from income tax, they will be subject to what are called charges sociaux or prélèvements sociaux. And they're essentially social security costs, and the rate at which you'll be charged is 17.2% on the gains. What I've just explained to you now is the traditional PEA account. There are two other types which I'll briefly cover. So we have the PEA PME or PEA PME, and the PME stands for Petit Moyen Entreprise, which are small and medium-sized companies. So essentially through this, you'll be able to invest in smaller companies that are not typically quoted on the stock market, maybe startups. I believe some employers may also be offering this through their companies, but I'm not 100% sure. And the only difference here is that the pay-in limit is increased from 150,000 euros to 225,000 euros over your life. And the second type is the PEA Assurance. And essentially this is using your insurance company as an investing vehicle. So you would go to an insurance company and you would open your PEA through the insurance company. So where can you open a PEA account? Well, this is such a common investing product like the Livret A savings account is. A lot of banks, both the major banks and the digital banks, offer them through their services. The conditions across banks are broadly the same. There may be some minor variances, such as what happens if you move abroad. Are you allowed to keep it? Are you not? Which is something to definitely make sure you check out. But the main thing to watch out for and to decide which one is best for you is the commissions, because obviously these banks will charge a fee, they will charge commissions on the operations that you make within the account. So you want to figure out what works best for you in terms of the fee structure. I hope you found this video useful. If you're thinking of moving to France and you're looking into the money aspect of it, or if you're already living in France and you've already got a PEA account or you're looking to open one, then why not leave a comment on the channel? Now check out these videos if you enjoyed this one. And if you're not yet subscribed and you want to see more content like this, then make sure you hit the subscribe button with the notification bell so you don't miss a single update. I'll see you on the next one. Et l'argent est à nous. Let's get this money in French.